Let's talk morning preparation, guys. Getting ready for the trading session is the most important time of the day. We're going to talk specifically today about what happens overnight, because just because equities are closed in the U.S. doesn't mean there isn't trading somewhere. So let's ask the question, how much attention should we be paying to what happens in Asia, to what happens in Europe, and to what happens to the futures markets during the overnight session when we get ready for the day?
Yeah, and this is sort of one of those things. And you said, we talk about the overnight markets, there is one other thing that you should consider, and it's a very special case, because certainly you're talking about market sentiment when you come to Europe, when you come to Asia, but there is one other thing that we should always consider, and that is post-market trading. When you're in earnings season, the only other thing that you should be considering is, okay, well, what actually had trades after the market? Your job isn't done at 4 o'clock. And what you can do is then look at what that price action was and try to take advantage of it. And when you do your morning prep, one of the things you should consider is what was moving overnight. Was it moving because it was trading Asia, or was it simply moving because they had an earnings print? That's the reason I wanted to come to Lulu, and it's a prescient trade, because if you look at it, I had a thesis myself for the stock, and the better one was simply looking at what it did in the post-market. And the key thing about this, I just want to show a daily chart. When they reported earnings, this is something that started trading after market in a range that it had not seen this year. So you were trading somewhere after 4 o'clock where it had not been. So it was in new territory, and suddenly you can start to care about what these levels might turn out to be. And when it made its rip on a monster earnings beat up $25, it pulls back into a 360 level. Now, I was looking for a trade-off of 355, and realistically, at the open, it pulled back into the aftermarket support. So when it entered a new price range, it was the trading and the buyers at that level, which gave you an indication, hey, somebody likes it when it pulls back there post earnings, and you only have that if you're watching what happened after the market closed. You know, if you just pulled up the daily chart, like I was just showing you, you're looking at this level here on the daily and saying, okay, that's 355, I'm buying in front of that dip. If you're looking at the post-market action after 4 o'clock, you're saying, oh, it turned at 360, they like to buy there. That's where you want to take the long, and the rest was history once you looked at this. So you do want, the market may close at 4 o'clock, but that doesn't mean that there's nothing for you to learn from at that particular time. Earnings is that low-hanging fruit. I like this example because it just happened to me the day we're looking at this.
Okay, great. Yeah, I mean, those are good examples. I'm going to go over another one here, and that what Brendan was talking about was, why not look at some of those Asian markets, right? I mean, I have the Nikkei here. It was similar on everything, the Hang Seng, everything. I tend to not look too much at Europe because, remember, I mean, the European markets, although similar to us here, I like to trade more NASDAQ names. In Europe, you know, tech is big, but not as big. That's why I'll look over here at some of the Nikkei or the Hang Seng, you know, stocks like the Nintendos, the Tencents, different things like that. A lot of different technology names, but you can look both ways. I mean, look at this rally here, and this is, again, the Nikkei. So you can see here, if I highlight down here, this is the 14th. So March 14th, we start to make some bottoms here. Big move down, and then March 14th is kind of when we started to go upside here. Not kind of, it is when. And you can see that's March 14th is this one offsetting green candle down there. Maybe it's a little bit hard to see. There it is right there. So that's March 14th, right? And if we look now over at us here, this is the NASDAQ, this is the 15th. So the very next day, obviously, when we open back up here, look what happens to the NASDAQ. So very, very similar. Markets closed down the day before, markets up in Japan, and then boom, right back up there to the upside. A lot of that had to do with Chinese listing companies, and that's another point, Brendan. Sometimes the news, you know, you don't want to like sleep on the fact that there's a lot of ADRs also trading here on the pink sheets, trading also in our markets, and not an ADR, but an official listing like a BABA or a JD, something like that, that's also traded on the New York NASDAQ. If you get those bumps with positive news over there in Asia, it will transfer forward over. But let's not sleep on the fact that, hey, the NASDAQ is its own beast. Apple only trades in one market. And when that market opens up, it's all hands on deck for the NASDAQ and the S&P. So for me, I like to look at what Japan does and China and some of those European markets, but I don't put like a full amount of, you know, credibility in my ideas. But we definitely look at them when we're making our watch list and the sticky note.
From a broad perspective, definitely the first stop you should make, but keep it broad. Understand that, especially in this very headline-driven environment, there's going to be other effects, other things affecting the overall sentiment of the market. But a great place to start, guys. Start in Asia, start in Europe, start with the futures and understand where we came from and then where we could go throughout the day.